Welcome back, and we are now hearing there is contention among the Bitcoin core developers about a change in the code that is going to be going into effect very shortly. We're going to break everything down, talk about the pros, the cons, what some of the backlash is against the core developers. We're also going to deep dive into the Bitcoin buying. Guys, we know MicroStrategy is buying, but what else is going on here that is going to drive the markets higher? We're going to discuss that. We're also going to be talking about potential fake crypto news as we are entering what I believe is the final stages of the 2025 bull market. And based on previous cycles, we can see and basically come to the conclusion when we start to see this kind of merry-go-round of fake news coming out and people believing it based on nothing and having no sources, this is an indicator that we are getting toppish and people are looking for anything to cling on to push the price higher. But when it is based on not actual data or fundamentals, as we've been talking about, everything will come crashing down, as we have seen with meme coins. And we're going to talk about meme coins as well. But we're going to be starting right here because this is something that we've been laying out on this channel for a few months now. Tether is now eyeing U.S. expansion with a new stablecoin as their CEO is courting Washington's crypto players. Now, basically, Tether is preparing to launch a US-based stablecoin as soon as this year as the CEO ramps up his presence in Washington to shape crypto regulation. In an interview with CNBC, Tether's CEO Paulo Adorno revealed that the company is working on plans to issue a new dollar-pegged stablecoin in the US as soon as this year, and the move comes as Tether, once accused of being a go-to crypto for criminals, rebrands itself as a partner to American lawmakers and law enforcement. Tether's Adorno said a domestic stablecoin would be different from the international stablecoin. It depends on the timeline of the final legislation, but we're looking at that by the end of the year or early next year at the fastest. But the timing is basically based all on what Congress is doing. We know that they're potentially talking about a stablecoin legislation that's going to be passing. I do think this is going to be good for crypto, but it's really going to be more about integrating the digital world of finance and DeFi and stable coins into the traditional, traditional financial space. The banks, we are already starting to see them getting involved. Wall Street, large corporations that want to put Bitcoin in their balance sheet, they're all kind of waiting for this this reprieve about crypto. And I think stablecoin issuance is legislation would be the first step. But when it comes to Tether, guys, we have seen this getting laid out over the last few months. Remember, you have to be ahead of the market. There's a lot of people out here that, again, with the fake news, they're just going to cling on to something and say, oh, pump the price, pump the price. This is not investing, right? This is gambling. It's going to the casino and saying, yeah, we're going to hit 15, we're going to hit red, and hoping you're going to become a billionaire with that. And we know that very unlikely at a casino, and it's going to be very unlikely in the markets as well. I have laid out for you with all of the data here that basically Tether is going to get regulated in the United States. It is, in my view, a sure thing at this point, right? Multiple states have sued Tether with no actual outcome that Tether is a fraud or that there's no money behind Tether, right? We also know that Cantor Fitzgerald, which is Howard Lutnick's hedge fund, and Howard Lutnick is the U.S. Commerce Secretary, we know that he's been basically the only major company that's been a friend to Tether for a long time, it seems. And we have seen Paulo Adorno and the Tether team in the United States as of recent. And this, to me, says that, with the regulatory environment changing, Tether feels more comfortable and probably knows that they're going to be allowed into the U.S. kind of financial markets. And potentially they're going to create this other stable coin to separate the stable coin from what Tether is, because, I don't know, that's what the regulators want. Who knows? But this is very bullish in my view because it's more integration of this ecosystem, and it's also clarity that these cryptos are part of the financial system in the world. Now, going into the fake news. And by the way, don't forget to give this video a free thumbs up. Now, we've been talking about Ripple and XRP Army for quite a while, but this XRP, I I guess Maximalus, his username is Ripple XRP. So yeah, probably. Anyway, he said just the other day, Ripple's CEO Brad Garlinghouse has increased the offer to acquire Circle for $20 billion. And the deal seems to be progressing towards completion. This acquisition could potentially transform Ripple into a bank. Okay, guys. The other day we did a story about Ripple potentially trying to buy Circle for about $5 billion and Circle declining that offer. And then we saw this basically the same day that we heard about that. And when I saw this, I started to look for other sources, look for crypto news outlets, crypto reporters to see if they can confirm this situation, and they can't. And this is not the first time that we've heard of this fake news. I don't remember the exact thing, but if you guys remember just a few weeks ago, we talked about something else happening with Ripple that the XRP army was pushing out, and there was no proof that that was actually going on. Here's the deal, guys. I know that people think this is bullish for Ripple if they acquire Circle, but this is actually not that good, because to me it says they know there is no chance that RLUSD, which is their new stablecoin, is going to overtake the market and become one of the big ones, right? It is $315 million right now in market cap, which is a lot for a new stablecoin, but it's nowhere near where USDC is in terms of $61 billion, or Tether, $150 billion. And so I think that Ripple originally, with the $5 billion offer, thought, hey, let's just buy USDC. This is kind of where they're going to be valued at, probably where right now, and let's just expand from there. But USDC said no. And now the XRP army is trying to push this narrative that they're going to buy it for $20 billion. Now, keep in mind, Ripple does have the money for this. They definitely do. I mean, they have 37 billion coins still in their escrow account, which is basically their piggy bank. And they have said, and they do, sell these coins on the open market to raise money for Ripple. And Ripple's main company is not really pushing XRP. We have not seen any evidence of that. Regardless of what the XRP army says, there is no proof, there is no substance to the claim that Ripple is going to further expand XRP and make XRP more valuable. Now, it would make sense for Ripple to do this because Ripple has so much XRP, and then obviously if the price of XRP is higher, they can sell more on the market and raise more funds that way. And therefore, they don't really actually need to raise funds the traditional route. But they're also not just going to give up, because they know, Circle knows that they're a valuable stablecoin and they have all the regulatory approvals already. Basically, they're licensed in many different jurisdictions around the world. So they have a leg up, and Ripple, it seems, is trying to kind of outpace that. But we have to remember, there's real news and there's fake news. In my view, this is absolute fake news. And, this is where the XRP army gets in their bubble, and they don't realize, like, this is not realistic. Like, first of all, XRP can become a bank without having a stable coin, right? They can become a bank without acquiring Circle. So the fact that just acquiring Circle, they're going to become a bank, Circle's not a bank, and USDC is not considered a bank either, right? They may have the same privileges that banks do in terms of access to the Federal Reserve, access to some of those liquidity options, but they're not a bank. So just acquiring USDC wouldn't make them a bank either. Personally, I don't think that USDC is going to sell to Ripple, and I don't think that Ripple is going to go at $20 billion. But this is an indicator, as we've been talking about, an indicator that we are towards the top of the market. Because once the fake news starts, right, and then on top of that, people believe the fake news, and on top of that, you may start to see price movements based on fake news. The market is topping. Right? It doesn't mean that we're at the top, but it means that we're getting very, very close to the top. Because once you reach the top of the market, and it may not mean for the whole market, maybe it's just for that specific coin like XRP, but once you reach the top of the market, you need a narrative to push it even further higher. Otherwise, the excitement kind of drains out, and then the investors and the traders, they start to sell off their profits because they realize there is no other narrative. And then the price goes down. This is what we saw with Solana, right? Solana was up for so long. It was the best performing crypto in the market for over a year, right? Went from $8 to $260. And then there was really no narrative besides meme coins. So what did the insiders and the traders and the smart money do? They started selling it off while the, retail investors said, "No, but Solana's doing this and Solana's doing that." And it's like, well, they haven't done it just yet. And by the way, I'm going to be posting another video. It's going to be called something to the tune of Solana or ICP, which has better AI, because both technologies have some AI capabilities or at least a roadmap to create AI capabilities within the blockchain. And we're going to be comparing those two in that future video. So make sure you guys are subscribed to the channel. That way you don't miss that other video that will be coming out or it's already out. And don't forget to give the video a free thumbs up as well. So I think I think it's important that we look at the market realistically and also based on the fundamentals. And yeah, when I see things like this fake news about $20 billion from $5 billion to buy a stable coin, um, maybe it is true, but to me, it seems just like fake news that's based on nothing and trying to push the price of XRP higher. And as I've explained, XRP is already at multi-year highs and has been stagnant at this point. Can it go higher? Absolutely. But based on all the factors that we talked about, I don't know. It seems like a little bit toppish. Moving right along, 2 Prime ditches Ethereum for Bitcoin, citing meme coin behavior. Again, kind of what we've been talking about all year. The big money, they don't want to be involved in meme coins at all. Anyway, algorithmic trading firm 2 Prime has exited Ethereum entirely, calling it statistically broken. In a Thursday statement, the trading firm 2 Prime announced that it's dropping all exposure to Ethereum and will exclusively manage and lend against Bitcoin going forward, citing Ethereum's unpredictable behavior, declining market momentum, and eroding institutional appeal. And this kind of goes into the theory that we discuss on this channel that all roads lead to Bitcoin, right? And I truthfully believe the longer you're in the crypto space and the longer you're able to see all of these projects outside of Bitcoin promise the world and then not necessarily deliver or just take a very long time to deliver or just not really be the technology that everybody wants, people say, okay, well, what is the better option? Is it the shitty altcoin or is it Bitcoin? And I mean, we could look at almost every coin and have this argument, right? Solana is a perfect example. Solana gave us meme coins. That's it this cycle, right? Everything else that they claim they're working on, claim they're building, claim they've launched, nobody's using. The only thing people use Solana for in the last 12 months really was for meme coins. And so when I look at Solana versus the rest of the market, I'm like, that's kind of ridiculous. That it's the same thing like NFTs, like people paying $3 million for a Bored Ape Yacht Club picture and saying, oh no, but I own it. It's like, but anybody can just copy and paste it. But like, no, they can't. That's not mine. And it's like, okay, if you really believe in the NFT thing, you go for it. But nobody is going to be paying you $5 million for this picture of a monkey. It's not going to happen. No, it is Cryptoviser. You're just fudding. You're just fudding. And now that $5 million JPEG is worth probably $25,000, which is still a lot of money, by the way. But it's definitely not what they paid for it. And so when I look at those things, it's like, do I want to invest in that nonsense and, potentially go for this like pie in the sky thing, like with this whole XRP situation? Like, who gives a shit if XRP buys Circle? You think that's going to increase the value of your XRP? Explain to me how. Explain to me how buying Circle is going to increase the value of your XRP. And by the way, even if Ripple gets all of the regulatory approvals that Circle has for their stablecoin, how is that going to, how does that relate to XRP? It doesn't. It has nothing to do with XRP. The same way that Ripple doesn't really need XRP. The only reason they're kind of keeping XRP in the conversation is because they still own 37% of the supply. But the XRP army will say, Cryptoviser, you're just fudding. You're just fudding. If they get Circle, oh my God, the XRP price is going to go higher. But why? It's a fucking stable coin. Anyway, you guys kind of get it. I think the smart money understands what we're talking about here. And so they don't want to be involved in meme coins either. Now, listen, I don't think Ethereum was just meme coins, but I think a lot of the The focus has been meme coins because when one narrative picks up, all the other blockchains follow, right? So the narrative was meme coins. So everybody wanted to be, oh, we're better at meme coins than Solana. It's like, who cares? Like, who fucking cares? Meme coins are not going to get you rich. It's not going to increase your value over time. It's not going to change the financial system of the world. Like, it's just gambling. It has nothing to do with the underlying technology and why most people got into blockchain or crypto in the first place. And this is shown because Bonk Bank adds crypto investing to its app. Now, this is a European bank, and they say over 65% of Europeans want a single app for banking and crypto, according to research by this bank. And so they're going to be allowing users to invest in over 300 digital assets, including obviously the main ones. The service called Bunk Crypto is now live in 6 European countries with further expansion planned. So very interesting stuff showing you guys that, the banks understand like there is some gambling in here and there's definitely trading and people want to be able to do this in one app. But, as I say, the big money, they're focusing on the big cryptos with the big projects and the big plans for the future. But that doesn't mean that we're not going to have contention and arguments in the way in between, which we are currently seeing in the Bitcoin Core developer community. There is a Bitcoin debate on looser data limits, bringing to mind the divisive ordinals controversy. And effectively, they wanted to remove the blockchain's op return size, which would allow more data to be embedded in Bitcoin transactions. But critics say this will only be used for spam. Drinking coffee on today's video. I actually was in a coffee shop the other day, and I always ask, when was the coffee? Well, I sometimes ask, is the coffee fresh? But I should be asking, when was the coffee made? Because they all say, oh yeah, it's fresh, it's fresh. If the coffee was made more than like 30 minutes ago, it's not fresh. And these coffee shops that are charging $7 for a cup of coffee, and they're telling me it's fresh, and it's not, like, I can taste whether it's fresh or not. I should start returning these $7 cups of coffee and telling them it's not fresh and I want a fresh cup. But yeah, that really annoys me when coffee shops, like, that is your whole brand, and you're telling me that it's fresh and it's clearly not. But anyway, you guys know, black coffee drinkers, we can taste the coffee. Unlike, like Dunkin'. I went into Dunkin' once, and I was watching them make a drink, and it was a large iced drink, and they put, I mean, half of it was pumps of sugar, right, the artificial sugar. Then another 40% of that was milk, and then a tiny bit of coffee. I'm like, that's not a coffee drink. That's a milk sugar drink with maybe coffee flavoring. It's freaking disgusting. But anyway, back to Bitcoin. So we hear this every once in a while in the Bitcoin Core developer ecosystem, where they want to push through a code change, and people argue that it's not the best thing for Bitcoin. Well, let's understand a little bit what in the Bitcoin is going on here, and then we'll kind of show you through some tweets on how some of the people in the community feel. Bitcoin developers are again at odds over how the world's largest and oldest blockchain should handle storing information on chain, with a proposal to relax long-standing limits on the size of data held, sparking fierce debate reminiscent on the ordinals on Bitcoin. Ordinals is effectively NFTs on Bitcoin, and they wanted to, a few years ago, enable the ability to put ordinals by adding, I guess, block data. And people were arguing, saying that this is just spam. I mean, NFTs are basically spam, but being able to put more than just a transaction on the blockchain, I think, is important for the future, because there is going to be more data in what kind of in these financial transactions, I should say. Anyway, the blockchain's op return feature allows people to attach a small piece of extra data to a transaction. It's often used for things like notes, timestamps, or digital records. The proposed change, put forward by another developer, would remove the 80-byte cap on such data, a limit originally designed to discourage spam and preserve the blockchain's financial integrity. Supporters argue that the current limit is pointless because users are already bypassing it by using the taproot transactions to hide data inside parts of the transaction meant for the cryptographic signatures. This is how ordinals and inscriptions work. They embed images or text into taproot transactions that are often unspendable, turning Bitcoin blockchain into kind of a data storage system. Another Bitcoin Core developer and a vocal critic of those ordinals that were discussed a few years ago, which he has long labeled a spam attack on the blockchain, called this proposal utter insanity and warned that loosening data restrictions would accelerate what he sees as the degradation of Bitcoin's financial first purpose. He said it should be needless to say, but this idea is utter insanity. The bugs should be fixed, not the abuse embraced. Critics of the proposal also have other concerns. The change would normalize illegal content storage, degrade the chain's fungibility, and turn node operators into unwitting hosts of malware and copyright violations. To demonstrate the potential this may bring, one Ordinals team inscribed a whole Nintendo 64 emulator onto the blockchain, which may get the attention of Nintendo, a company known for being protective of intellectual property. From my understanding, like you can't even play a Nintendo game, certain Nintendo games, on YouTube because they'll copyright restrict it. That's from what I heard. Maybe that's not accurate, but I do know that Nintendo specifically is very protective of their intellectual property, right? What they have, which kind of makes sense. But we're also in a different world now where they it's kind of free promotion, right? Anyway, supporters of the change argue that relaxing this op return limit may actually reduce what's known as UTXO bloat, a phenomenon that slows down the blockchain when the network gets cluttered with non-financial transactions and mempool fragmentation. UTXO bloat is documented side effect of ordinals and inscriptions using Taproot. For example, a few years ago at the height of the ordinal's popularity, the Bitcoin blockchain becomes so congested that Binance had to suspend Bitcoin withdrawals for a number of hours. The developer said the demand exists and pushing it outside the public relay network only causes greater harm. So yeah, you guys can see there's a lot of contention, right, back and forth, and this is good. Having these kind of debates is good within the ecosystem because I don't know whether it's a good or bad thing to implement this change, but I do like to hear from both sides to understand what are the potential effects of this change to the code. The other thing to keep in mind is it's very difficult to change the code of many of these cryptos, specifically Bitcoin. And so whenever there is a change and there is a lot of divisiveness on that, it makes you kind of wonder, like, is this actually good for the blockchain or should we just leave it the way that it is? And that brings us to some other, people in the community. Jason Hughes, who's the VP of Development and Engineering at Ocean Mining. I believe they're a mining company. He said this is still being jammed through by Bitcoin Core, locking out the users and community from participating in the discussion of this PR. I guess it's a push request, and calling it their participation spam while simultaneously endorsing unlimited spam on Bitcoin is incredibly ironic. Ditch the core and run knots. And so he's been kind of voicing his opinion, saying Bitcoin Core developers are about to merge a change that turns Bitcoin into a worthless altcoin, and no one seems to care to do anything about it. I voiced objections, lost sleep over this, and despite clear community rejection of this push request, it's moving, meaning he believes it's going to go through. He said it seems they couldn't take community heat and started a new push request that effectively does the same thing as the originally linked one, except this time they're not allowing any comments and even moderating direct contributors. If your changes can't survive debate, maybe you shouldn't make them. Now, I would kind of agree with that. This guy, Pedro, says none of this is happening. That user that I just showed you from Ocean Mining now lost all of what was left of his already dwindling credibility. Attention whore. I mean, listen, guys. Jameson Lopp basically responded to one of the things that Jason was saying and said, this policy change does not increase the total data throughput allowed on the network. If anything, one could argue that it does the opposite. Op return data is not discounted like witness data is, thus the size of the blocks within this is smaller than those with data in witness. Now, again, a lot of this is Bitcoin Core conversation, right, with their own language that we don't really necessarily understand. But here's the deal, guys. The conversation and the arguing, I think, is important because we need to hear both sides, right? And the people who want this to go through, obviously, they want it to go through for a reason. And in a lot of these cases, in a lot of these ecosystems, a blockchain, unless there's massive pushback, which typically there won't be. There'll be a few people and everybody else kind of just watching on. And then, people are waiting to hear both sides to see where they should land their opinion, right? And most likely when we get to this part, right, or this far along in the proposal, it will probably get pushed through. It's just a matter of when and how much we're going to see of a change to the network. I don't think this is a massive issue for Bitcoin, but it's definitely kind of setting Bitcoin up for future changes as well. Because at the end of the day, I do think that as time goes on and more people use these networks, there's going to have to be more bandwidth, right? You can't limit the bandwidth to like very, very small, because then we end up with systems like our government is currently using, right? Where they're going into caves and having 40-page retirement packets for every single individual, and they have to go file it in some cave somewhere in the mountains. Like, that is so inefficient, but maybe at the time that they created that process, that was the most efficient thing that they could be doing. And so it's the same thing in crypto and in Bitcoin. Bitcoin has to evolve, because if Bitcoin doesn't evolve, the system will evolve around it. And that's why we see all these altcoins popping up. Ethereum can do a lot more than Bitcoin. Is it as secure as Bitcoin? Does it have the fundamentals that Bitcoin does? I don't know. That can be argued for ages. But at the end of the day, Bitcoin needs to evolve, because if it doesn't evolve, finance will evolve around it. And this is why we see billionaires pumping money and resources into Solana, into Sui, into Sei, all of these new generation blockchains that can do things way better than the previous generations. And it's always going to be that way. And so if Bitcoin and Ethereum and a lot of these legacy chains don't update their code and don't adapt to the changes in the financial ecosystem, including using ordinals, including adding data to some of these transactions. Think about it. A large bank wants to memo a major transfer so that they can reference it in the future, and they could put it on the blockchain. They could put a reference code in the notes of that transaction so that they can always refer back to it and understand why they made that transfer within their own internal communications. So we'll see kind of where this all lands, but there is contention in Bitcoin. And typically when there's contention, we start to see narrative. And when we see narrative, this is where prices can potentially go much, much higher. Talking about narrative, we're now hearing Metaplanet is issuing $25 million in bonds to buy more Bitcoin. And don't forget to give this video a thumbs up and hit that subscribe button. Let me know what you're drinking down below. So we know Metaplanet. This is I think a Japanese company. Sorry, I still have the thumbs up on. Metaplanet, it's a Japanese company. They've been buying Bitcoin. We know that. Now they're issuing more bonds. Basically, they're running the MicroStrategy thesis over in Japan, while MicroStrategy is continuing to raise more money to buy more Bitcoin. And again, more risk. As we've talked about endlessly on this channel, what MicroStrategy is doing is a test of this entire financial system. Can this work? Will it work? What will happen in a downturn? What will happen in a bear market? What's going to happen in the bull market? How much money can they raise? Can this go on forever? Will they be able to pay the money back? Will their stock price keep going up? These are all the questions you have to ask as an investor to understand, is this a good or bad investment? Now, I'm going to keep it real with you guys. I do own some MicroStrategy and some derivatives built on MicroStrategy, very small amounts, because I do think that there is a very high risk of the stock price not moving higher as people anticipate because of all of this of what they're doing. So MicroStrategy is going to be raising another $21 million to buy Bitcoin, posting the largest Q1 loss on Bitcoin price decline. So right now the company owns 553,555 Bitcoin. So over 500,000 Bitcoin. They have a first quarter reported loss of $4.2 billion following the price decline of Bitcoin. It's only $16 per share. It's actually not that bad. The MicroStrategy stock, when I'm recording this video, is around $300. So only getting a 16% drop, that is actually not that 5% loss, it's not that big, especially understanding Bitcoin went down 30%. But now they're going to be buying more Bitcoin. And like, what does this all mean? What is this a good thing or a bad thing? Well, Michael Saylor showed no signs of slowing the pace of Bitcoin acquisitions, having used up nearly all of his previous $21 billion common stock offering with their recent Bitcoin buys. The company announced a fresh $21 billion at the market offering. Now, a lot of people ask me, Cryptoviser, what is at the market offering? Well, at the market offering means, and we know back in January, MicroStrategy increased their total outstanding shares from about 300 million shares to 10 billion shares, right? So they basically 30x the total number of shares the company has, but most of those shares were not issued yet. So when the price goes higher, basically there's a formula that you can run. MicroStrategy has this formula where it basically shows you how much Bitcoin per share you own effectively, right? You don't really own it, but let's just say you own it because they take the total number of shares of the company divided by total number of Bitcoin they have, and that's how you get Bitcoin per share. And so when they see that there's a premium, right, the stock price is higher than what that underlying Bitcoin per share looks like, they start to sell new shares on the market at this price, right? So if they're selling, let's say 100, let's just say 1 million shares, okay? And we multiply that by $390. I think I said the price was 300 before. It's actually $400. So either way. So let's say they buy they sell 1 million shares. And remember, they increase their total shares from 300 million to 10 billion. So 1 million shares is really not that much if you think of how many shares they have the ability to sell. Okay. So if they just sell 1 million of that, multiple billion, 9 billion, they're going to get $390 million. And so all they got to do is sell those shares in the market. So $21 billion, that's what they're raising. And they can sell all those shares on the open market. That's what's called at the market, ATM. That's what they're selling it at. So people who are, quote, irresponsibly long MicroStrategy, they believe the price action that we've seen in MicroStrategy over the last few years with these 10Xs are going to continue to occur. Now, they may, but the difference between now and the previous cycle is in the previous cycle, MicroStrategy was not really selling shares to buy the Bitcoin. They were taking out debt through convertible notes. Now, convertible notes, you could effectively say are selling shares, but they're selling longer dated shares, right? So you're not going to get those shares until it's converting time. But that's not what they're doing anymore. Now they're just selling on the open market. So personally, I think the risk is so vast that because they're selling new shares on the market, the price cannot go higher. The price of the stock cannot go higher. And now they're going to be doing it with even more Bitcoin, $21 billion more. Okay, so that's a risk. And I know you guys get it. The people who watch my videos, you guys get it. But there's a lot of people who don't understand this. And there is going to be a time in this cycle that it's time to short MicroStrategy. I don't think that we're there yet. I don't know when we're going to be there. And I don't even know if I'm going to be able to identify when the right time is. But there is going to be a time when it is the right time to short MicroStrategy. Because if they're continuing to buy and the price of Bitcoin continues to decline as we're exiting the bull market into a bear market at some point in the future, that could be the potential to sell, because MicroStrategy is probably going to go, it's going to go have more downside percentage than Bitcoin, I would imagine. Because once this trade is no longer, people are going to be dumping, right? And these people who are irresponsibly long, they're just going to keep buying the dips, buying the dips, buying the dips, buying the dips. And who are they buying it from? This is the same thing, guys, this is the same thing that Ripple is doing. Ripple is selling their coins on the open market to raise money for Ripple, not for XRP. And the XRP army's like, oh no, they're going to make us rich. They're going to make us rich. How are they going to make you rich? By selling the coins on the open market. Same thing for MicroStrategy. Now, with MicroStrategy, there is a bigger plan here. There is a bigger thesis that over the course of time, Because this is kind of like a Bitcoin holding company, the price of the stock will go up based on the price of Bitcoin. But that may not happen either. Let me explain why. One of the issues with this thesis that because MicroStrategy is a Bitcoin holding company, that the price will go up as Bitcoin goes up. But with the mechanism that Michael Saylor has in play, every time the stock price goes up, potentially because the crypto goes up, he is going to be selling those shares on the open market. So any demand that there is for MicroStrategy, he's going to be selling to you. And so I think that the bigger plan here for MicroStrategy is, because it's becoming a Bitcoin holding company, I think that we're going to start to see like hedge funds, retirement funds, and the like investing in MicroStrategy if they don't want to directly invest in Bitcoin. But again, like we saw last cycle with FTX, pension funds were investing in FTX. They weren't investing in Bitcoin. They weren't investing in Coinbase. They were investing in FTX. And they lost all that money. Anyway, another indicator of what's going on here and why Michael Saylor is buying more is because what are we seeing happening with the Bitcoin ETFs? We're seeing massive inflows occurring every single day for the last like 2 weeks or something like that. We have seen Bitcoin inflows to the tunes of hundreds of millions of dollars from April 21. 400 million inflow. Next day, 900 million inflow. Next day, 917 million inflow. Next day, 442 million inflow. Next day, 380 million inflow. And so every day we're seeing inflows. But the difference now is that MicroStrategy is buying at the same time the Bitcoin ETFs are buying. That will cause a supply shock at some point. I don't know when, but we know when MicroStrategy was buying at the beginning of 2025, the ETFs were selling, and they were selling billions and billions and billions of dollars. In my view, that was to offset and keep the price suppressed on Bitcoin because MicroStrategy was buying. What would happen if the ETFs did not sell off? The price would probably go much higher. So Wall Street was testing their power, and they found out they have a lot because all those outflows kept the price of Bitcoin lower. And while everybody was like, wait, MicroStrategy's buying, Marathon Digital's buying, Bitcoin-friendly president, Bitcoin crypto czar, and the price of Bitcoin's going down. How is that happening? And I laid it out for you. It's because of the ETFs. Last year, when the ETFs launched and everybody was cheering it on, what did I tell my viewers? Wall Street is in control. And so all these other ecosystems that are, we need an ETF, XRP, we need an ETF, Solana, we need an ETF. Y'all aren't getting it. Y'all don't get it at all. Because if XRP gets an ETF, almost a guarantee, I do not like shorting stocks. I do not like shorting crypto. But when they launch these ETFs, there may be an initial surge. But I would imagine once we start going into the bear market, oh boy, it is going to be pandemonium in these markets, not just with the new ETFs, but with Bitcoin, because everything is connected. So if the Bitcoin price goes down, people on Wall Street just start to sell their Bitcoin ETFs. They start to sell their Bitcoin ETFs. More Bitcoin is sold on the open market. More Bitcoin sold on the open market. More people get liquidated who are in margin. More people get liquidated, more selling. More selling, price goes further down. Further down, more liquidations, more ETF selling. More down, more liquidations, more ETF selling, more down. And the potential downside is so vast that people don't fully get it, right? We had circuit breakers in previous cycles. The circuit breakers were the crypto exchanges. They would just shut off and say, "Oh, we due to so much, activity, our systems just shut off." And it's like, so your system shut off the same exact time that Bitcoin was cratering by 40% in one day? No, they had to stop the bleeding because it's not just people are just selling and the algorithms just keep selling off. It's all the liquidations, all the over leverage. That's what pushes the market even further down, and it becomes a domino effect until it stops. This is why in the traditional financial markets, in the stock market, they have what's called circuit breakers, where if the price goes down or up 15% within like a certain amount of time, they shut off trading for a certain amount of time to let the algorithms and the traders kind of reposition themselves to stop the bleeding. And so we'll see if that actually does happen. Invest Answers says this on X. He said Sailor and MicroStrategy plan $21 billion at the market and $21 billion of preferred stock issuance to raise $42 billion. The at the market alone could buy 221,000 Bitcoin, soaking up all the new Bitcoin supply for 18 months. With preferred, it's double, covering 3 years. It's just one player. Bitcoin stocks are up $3 in after hours. So effectively, he's responding to this recent $42 billion raise that Michael Saylor announced. And here's the deal: this is true, but because the issue is MicroStrategy is selling, and when MicroStrategy sells, because there's such a large holder of Bitcoin, if the price of MicroStrategy goes down, the price of Bitcoin will follow it. It will follow. And if MicroStrategy is selling and then diluting the shares of their stock, people don't fully understand this mechanism here, right? They just see the stock price of MicroStrategy going down or staying stagnant. And I'm saying relatively stagnant, right? I mean, we've been ranging between $300 and $400, so it's kind of stagnant. But they see this stagnation in the price, and they're like, "Oh, well, this is because Bitcoin is just sideways trading. I don't know." No, the reason it's sideways trading is because they keep selling more stock onto the market. If they didn't sell the stock on the market, the price would probably continue to go higher, little by little. But when they sell more shares on the market, this is happening very slowly. It's kind of like a slow drain. That's suppressing the price of MicroStrategy. And in my view, it because yes, they are buying Bitcoin with it. This should push the price of Bitcoin up. But because of the connection, right, between Bitcoin, MicroStrategy, the ETFs, all of these major players, they move the market. They can definitely move the market. And opposite sometimes of what you would think. That's why when we see MicroStrategy buying so much, the price typically doesn't go higher until either right before or shortly thereafter. And so we really have to monitor what's happening in these markets from all aspects, from the large players to the small players, to understanding the risk, to understanding all of the mechanisms with leverage and overextending these positions. Because like I just said, all of the concepts that we just discussed in this video, whether we're talking about Bitcoin Core, whether we're talking about, the meme coin situation or fake news about Ripple and XRP, the people who are irresponsibly long XRP don't see that Ripple getting a stable coin is not going to change the world for XRP. It may change the world for Ripple, but that's not going to change the world for XRP. People also don't understand, who are holding MicroStrategy, that this is not the trade anymore. It may have been the trade last year and the year before that and the year before that. It is not the trade anymore. The trade is Bitcoin, because now MicroStrategy can move the price, but they're not really moving the price in the positive direction because they keep selling shares of their own stock. So that constant dilution, potentially forever, while they're buying this asset in a bull market at the top of the market, a lot of risk there, a lot of risk. And so what I try to do when I'm analyzing these markets is, because yes, I do want to make money in these markets, but I also don't want to lose money. And so by not losing money, you have to look at what is more risk averse. Obviously, there's going to be risk, because no risk, no reward. But how big is the reward versus the risk? For me, I would rather own Bitcoin than MicroStrategy. And those who say, well, Cryptoviser, that doesn't make any sense. You should hold MicroStrategy versus Bitcoin. Okay, then you explain to me why the company's CEO and founder of MicroStrategy, Michael Saylor, he owns zero stock in the company. You could look this up yourself. People have said, Cryptoviser, you're lying. He still owns MicroStrategy. No, he doesn't. He sold all his MicroStrategy stock over the last 2 years. Every single share. He has zero. Why? Because he's a Bitcoin maximalist. What does he do with that money? I would imagine most of it goes into Bitcoin. And so he's buying Bitcoin, not MicroStrategy. He's using MicroStrategy to pump Bitcoin, which would effectively, I'm cheering MicroStrategy on for sure, because at the end of the day, MicroStrategy is going to be a positive impact on the price of Bitcoin and therefore the rest of crypto if they do things the right way. If they just keep taking out more and more and more and more leverage, keep selling more and more and more and more stock on the open market, it's not going to affect the price of Bitcoin as much as it's going to affect the price of MicroStrategy. And so if you're irresponsibly long MicroStrategy, that means that you're not really a Bitcoin maximalist, because a Bitcoin maximalist wouldn't own MicroStrategy. They'd own Bitcoin. Anyway, hopefully you guys enjoyed the conversation today. Don't forget to give the video a free thumbs up. Let me know what you guys think down below in the comments, and check out my other videos. If you want to become a channel member, click join down below. I'll see you guys on the next video. Invest responsibly and crypto on.